I've been trading with price action and using technical analysis for over 15 years. And in this video, I will show you why for so many traders, technical analysis just doesn't seem to work. I will show you exactly what most of the traders are doing wrong. And I will show you how to really trade price action. And we're going to take a look at so many different chart and trade studies with some very interesting concepts such as hidden patterns, complex structures, liquidity runs, fake outs, trend shifts, multi-time frame, and many more things. So let's get into the video. So let's get into the charts, and all of the charts that you see in this video are very recent price action. Maybe a few days old, maybe a week old, maybe 2 weeks old, but they are not cherry picked. And I will show you exactly what is happening every week on your price charts and why a lot of traders struggle and how to overcome it. So let's take a look at here the Aussie CAD, and we have a complex trend change structure at play. First of all, what probably most traders will be familiar with, trend structure, right? The market moves higher and we follow this wave pattern. So far so good, probably nothing new. We have trend waves that go into the trend direction and impulsive or corrective wave that go against the trend direction. And that's probably nothing new. We have here then a change though, and the change is very important. Whereas here, after this trend push, we have a regular flag pattern. The market moves lower a little bit against the overall trend direction. How do we know it's an uptrend? Because we broke a previous high here. And then we go into the next trend wave. And after the trend wave, we are moving into a distribution pattern. And a distribution pattern is nothing but a consolidation that just keeps going for an extended period of time. What you will see is sometimes that if those consolidations take very long to develop and the market just goes sideways for a long time, the probability changes. The probability for a coming trend continuation is much lower. So the probability will go down. And what happens is that a trend reversal becomes more likely. So when you see that there is something changing in the duration of trend waves, that's your first important tell. Also, the trend wave obviously depends and matters a lot. Whereas here you can see we're in trend wave 1, trend wave 2, trend wave 3, trend wave 4 is the flag, trend wave 5 is here our trend impulsive wave, and then we go into this here. And what this means is that we have wave 5 completed, so it means that the Elliott wave count has been completed. And what we mean by that is that a continuation into wave 6, 7, 8, 9 is much less likely than to have a reversal. So far, this is nothing new and probably a lot of traders will know that. But how do you get into the trade? How do you short a market that has a high likelihood to turn around? And most traders, what they do is that they look for this support level, and then on the breakout, they will just get short in a breakout trade. And I've been trading breakouts for 10, 12 years. And what I've seen, especially over the last 12 to 24 months, is that breakouts don't work as well anymore. And at this point, it is Q3 in 2022, August, almost September. I would not recommend anymore to trade breakouts at this point. If you trade breakouts, they have to be done with a lot of care, and stop loss placement and trade management is very important. However, what I would recommend and what a lot of my mentees, the traders that I mentor, are doing now is that they're switching to complex fake outs. So what happens is that a lot of traders will go short here. So what you want to see is a breakout first. And the breakout occurs here, all right? So what a lot of traders are going to do is they go short. And where will your stop loss be? Your stop loss is probably somewhere in this range, right? We have the last swing point, we have our breakout level, and that is where a lot of traders will have their stops. Okay, so far so good. And because breakout trading is so common and so popular, a lot of traders will speculate that those breakout trades will fail. What this means is that very often you will have, after a breakout, a push against the trade. Very often this is a very strong push. The strong push is important because it will scare out a lot of short positions, and then it will make it much easier to offload and unload positions here into the opposite direction. So what you want to see is a push. You want to see also a strong push, and then you want to see a resume into the initial direction. So let's see, what do we get here? So you can see the market is struggling. We have a push, which is good, into the stop zone. Okay, we seem to be turning around. Not yet, we are staying above the zone, and now we have the reversal. So what we have here is everything we need. We have a very strong push. You can see strong candles. We didn't quite make it here into the previous highs. If you would see that the market would penetrate previous highs and then fall lower, even better, but we don't have that in this case. But we have something else. We have very strong reversal momentum. And this is very often the case on those stop runs. When you see that the market is hitting stop pockets, the momentum will increase. You have more volatility. The market will move quite a lot in a short amount of time. But it's very important that you wait for the fake out and you wait for the market to return into the initial direction. And what you can do is also what I would recommend, turn on your daily pivots. In TradingView, you just go to indicator and you just type in pivot, and then pivot point standard is the one you need. And what you can see is that pivot points work exceptionally well during those distributions. Here, take a look at this and take a look at this. What happens is that on the reversal, when the market is turning around, when it's suddenly making lower highs, we are retesting here the pivots as resistance. We move lower, move into the pivot and reject it. And then again, move into the pivot and reject it. And if you see that pivots are holding as resistance, whereas previously they were clearly support, here you can see that, this is a very important change in market structure. And pivot points are used in a lot of algos, high frequency trading programs, and also a lot of professional traders. The ones that I know, a lot of them use pivot points. It's a very important tool to have. And at this point, what you could do is then at this point, it makes a lot more sense to have a short position. And you could put your stop loss all the way above the pivot point. If you want to be an aggressive trader, you put it above the breakout area. So you can find the optimal stop loss approach for you. Targets, you could make your life simple and just trade into the previous demand area here, or you could keep an open target and then just trail your profits. So what happens afterwards? Let's move it step by step. You can see we're moving lower. We're retesting here the previous level once again, but we don't make a deep push. You can see up and down, up and down. The pivot is going down. That's good. Generally, what you don't want to see is the market violate a pivot. So we are trading here into the first supply area. Your profit would have been hit. We keep going lower. You can see the pivot is now here. The market is now moving into the pivot. So it seems like we are in a corrective mode. Whenever you see the market make a push into a pivot, that shows you are in a corrective wave. In a trend, the market should not be able to move into the pivot. And what you see now, we're trading around it. So now it seems like we are losing a lot of momentum. And if you're not completely out, maybe on your first target, you only took partial profits. Now it's a good time to think about closing your trade fully, because this is not a very strong pattern. Or you could leave it open, maybe move your initial stop loss down, maybe above the highs here, which are now offering. And then you could wait for the market to see, do we get a breakout into the new direction? Or maybe a break and retest. Again, you look for those fake outs. There are a few options, obviously, how you could do that. But the most important thing is that I would recommend, for the first example, stay away from classic breakouts, wait for the fake out, and also start trying to apply pivots that are really, really strong. Now let's move into another example. So now we have one of the most interesting patterns that I've been studying over the past recent months, maybe 2 years. And this is a pre-trend change pattern, and we can learn so much about trading psychology, but also market structures. So what we see here is a very strong bullish trend wave. The market moves higher very strongly in a short amount of time. Then we have a classic consolidation and a continuation. So far, so good. This is a regular price or trend structure, right? A trend wave, consolidation, continuation. So we break into new highs. That's good. Everything so far shows you bullishness. But something very significant is changing afterwards. And then we have a strong bearish trend wave. And the key is here that you can see that we break through the last low, and that's not what you want to see. That's the last thing that you want to see if you are looking for a long breakout, or if you're in general in a long trend, because this is a clear violation of trending principles. And at this point, your mindset and your bias should shift. Now it is very, very likely that we're entering a bearish trending scenario. And at this point, it's very likely to see more bearish continuation. But one thing that I see a lot of traders do wrong is that they jump on trades too early. And here I would recommend to wait a little bit. And there are a few very important things. First of all, we want to see, does this hold up? So after the strong trend wave to the downside, we would like to see that now the trend shift occurs and the trend pattern changes to a bearish mode. For a bearish mode, what we need to see that the consolidations to the upside, they will come but they should be short. They should not break previous highs. They should maybe go somewhere in here, maximum, and then turn around, right? And that would give us a new trend wave structure. Now it changes, and now we break patterns and trend waves to the downside instead to the upside. So now we want to see that, and this is where we trade complex patterns. So at this point, what you could do is wait for the market to pull back. That's the first step. So let's see. So do we get the consolidation? And we do. You can see the market is moving higher. So now what you don't want to see is the market take out this high. If the market breaks higher, then my bearish scenario is gone and I would have to rethink my position. But as long as we stay below this, I would be a short-oriented seller. I'm not short yet, but I'm looking for shorts. So let's see. Do we see signs that the bullishness is fading? Okay, we have a very strong candle, almost an engulfing candle. And now we have a doji. So at this point, even one candle ago, you could move to the lower time frame, maybe 5 minute. And this is how it looks, right? So this is how the 5 minute looks. And here we can see a trend change pattern. We have here our left, right shoulder here. Very small right shoulder, but you can see it, the head, the left shoulder, and the neckline. And what happens is that we seem to be breaking the neckline and we are making a retest. Sometimes, like in the first example, you will see retests go all the way back into the right shoulder. But sometimes the market will pull ahead and will just give you a retest here. What I don't recommend is taking the breakout. If you take the breakout, it is very likely that within, maybe not the next candle necessarily, but within the next 3, 4, 5 candles, you're going to have a pullback, and that sucks. You don't want to be in a trade where you immediately sit in negative profits. So wait for the pullback, and then you will often find much better scenarios. So at this point, I would be really, really interested to sell, but I want to see that the market is able to stay below that. So one candle, and you can see we kind of rejected, but we have a wick. Not ideal. This looks much better. So now you can see we have the pattern, we break, retest, and reject it. Not a strong rejection, granted, but this would be still enough. We are at least staying here below this. And we have had the retest. So, and keep in mind, we're on the 5 minute. Things move very, very fast. So breakout, stop loss, probably somewhere here in the area here above the breakout. And then target-wise, you can have a classic target, maybe 3-to-1, 2-to-1, maybe target the last lows, whatever it is. Let's say 3-to-1, which is a good trend reward-risk ratio for trend following. So let's see. You can see the market unfolds very quickly. And we didn't make it all the way, but now you can see we had a little bit of a push. And at this point, remember what we said in the beginning, this is not ideal. You don't want to see strong bullishness coming into the market. Now you can see we are here in this range. So if you have taken out your target, by the way, it's the previous low, then if you're not fully out of the trade, you should think about at least moving your stop loss, maybe here not to break even, but move your stop loss here above the range, maybe somewhere around here above the recent high. Or you could take full profits as well, because now the likelihood to see more bearishness is not as high anymore. And remember, you got a good amount of pips out of here already. And this is a very, very interesting pattern. So let me recap. What you want to see is a change in trend wave lengths. So we go from long bullish trend waves to suddenly long bearish trend waves. And then we want to wait it out. We want to wait out the bullishness, and then we go with more bearishness. So this is how you can find really interesting day trading strategies and day trading ideas. Those wave reversals, they come very often, and I may have a few more in this video. Let's put the two things that we learned so far together, and this is an example from just 2 weeks ago. And I think here we can learn quite a bit. First of all, we can see the market was clearly in an uptrend. The market kept making higher highs, clearly. But also what we see is suddenly very strong selling sequences, very, very strong. And especially this last one here. That's the key, and that is where I would shift towards a bearish mindset. Keep in mind, doesn't automatically mean that I will short here, but I will start looking for shorts. At this point, it's more likely to see the market move lower than it is to see a continuation above the highs. So when you see that a previous low is broken, a lot of breakout traders will jump on it. And I'm sure that a few years this could have been a profitable trading strategy. Just get in short, put your stop loss somewhere here, and then ride the breakout. But the tendency for just smooth breakouts has decreased a lot. And what will often happen now is that after such a move, you will see a pullback. And the pullback should be below the last high. You don't want to see this high taken out. And you would like to see the market make a move somewhere here and then move lower. And this is where you find the trades. And this is why so many traders struggle with breakouts, because they are not aware of what is happening. But I've been trading those, as I said, well over 10 years, and I've seen hundreds and thousands of them. And I've noticed that over the last few years, breakouts don't work as much anymore. But what works is that you can see the market is struggling, you have your breakout, and then you have a move back. And let's just look at the pivot, the fib. We move from fib here to here, and you can see again, 38, we move a little bit higher here, and we reject it. And at this point, now it gets really interesting. Now you could start looking for shorts. And what we could do is we go from 1 hour to, let's say, 5 minutes. And on the 5 minute, we have obviously a lot more noise, and we have to come up with a trading plan. So one thing that could be helpful is you wait for the low break. If you are very aggressive, you could look for other patterns. Maybe see if we get a trend line here and then trade around that. But let's see what we have. So you can see we're seeming to break the trend line. So aggressive breakout traders would get in on a trend line breakout. Let's see what we get. We have our trend move. All right, I would like to see what happens here, because that's where probably can expect a lot of movements. So what we see is previous support is turning into resistance. We trade in the box, right? Okay. So far so good. We keep trading lower. We reject highs. You can see, even on a micro level, this pattern is going to hold up. A lot of traders are going to be aware of the support level, right? Then you have your breakout, move lower, and then very likely you're going to see a continuation here. Let's see, we have the strong move, lots of fake outs in this area. As expected, let me speed it up a little bit. I want to see what the market does. All right, so here we are now at this low. Let me clear this up in a moment, and then we'll see. So what we have here is a trend line, most likely. All right, so we have a trend line here that we can use. We also have the previous low. So we want to see a pullback. Why do you want to see a pullback? The market has made just a very significant move, right? And after a significant move, there's a high likelihood that we're going to see a pullback, because the market always goes in this rhythm. This is very important. It's very simple, but it's important. Because if you see that the market has just made a long move, maybe lower or lower, then the likelihood that you're going to see a pullback is just so much higher. The market just not going to move in one straight line for hundreds of pips. There's always this back and forth. And if you have seen a long trend push, then wait for the consolidation. Don't get in, don't chase long trend waves. Wait for a pullback. You will thank me later. And you can see we're struggling here. We are pulling back. Trend lines are really, really interesting to work with. Maybe a pivot. I'm not sure. Is there a pivot? The pivot is here, you can see. So we're not pulling into the pivot. But you can see we are pulling into the trend line. So at this point, now it gets really interesting. At this point, you could say, okay, I really want to be short now. Because now there's just so many things coming together. Let me walk you through it. We have seen the higher time frame probably increased profit taking. We have seen here the divergence. We have seen the long breakout into the low. We have seen the market make a lower high. We have seen the trend line get broken, so very strong selling here. And we see the break and retest. So there's so many things that are all screaming go short, and that we could think about getting here on a breakout. So this is how you can see we move lower, and this is where a lot of power is released. And again, I just selected a random 3-to-1. Your stop loss should always be above your breakout area. So in this case, we have a trend line, and you want to make sure that your stop loss is above the trend line. And then you can just go for 3-to-1, 4-to-1, and just see how it goes. But this is why a lot of traders are struggling with technical analysis, is that, of course, everybody is aware of this low, and everybody knows that if you get a low breakout, the trend structure changes. But the real interesting thing is if you can get in on a pullback or into a new trend wave. Wait a little bit longer, and I know there's a lot of patience required, but if you've been struggling with technical analysis, then I would really recommend think about what I've been showing you so far. And now let's keep going.